Hi everyone, this is a technical analysis on your USD. Let's start with some fundamental background first. The USD weakened across the board recently due to a more dovish than expected FMC decision last week, where the Fed decided to signal a bigger QT taper beginning in June, and the Fed Chair Powell pushing back repeatedly against rate hike expectations. Moreover, the data on Friday showed that the Fed might indeed just keep rates higher for longer as job and wage growth soften. The euro, on the other hand, has been gaining ground mainly because of the USD weakness and some positive news on the growth side as the PMIs continue to improve. The market has already fully priced in three rate cuts for the ECB this year, so that shouldn't weigh much on the euro anymore. The market will need something to give it a reason to price in a change in the Fed's or ECB's monetary policy to trigger another sustained move. Now the daily chart. We can see the EURUSD spiked into this key trend line around the 108 handle following the soft US NFP report. The price eventually got rejected from the trend line and the market faded the spike as the data didn't change much and we still have the US CPI risk ahead. The sellers will likely keep piling in around these levels to position for a drop into new lows, while the buyers will want to see the price break into the upside to increase the bullish bets into the 109 handle. On the 1 hour chart, we can see that from a risk management perspective, the buyers will have a much better risk reward setup around this 107.27 level, where we can find the confluence of this upward minor trend line and the 61.8% Fibonacci retracement level. The sellers, on the other hand, will want to see the price break into the downside to invalidate the bullish setup and increase the bearish bets into new lows. This week is pretty empty on the data front, with just the US jobless claims on Thursday and the University of Michigan Consumer Sentiment Survey on Friday being the only notable releases left. It's unlikely that they will change the market's expectations, so the price action might remain tentative heading into the US CPI next week, although the bias might remain generally bullish because of the risk on sentiment.